Welcome back to Stocks and Trades channel. We provide easy to digest information and short videos about stock market investing, personal finance, money saving, and building wealth. Our content is designed to help you achieve financial freedom sooner. The holiday-shortened week ended with a bang, as news of a new COVID-19 strain sparked worries over potential lockdowns, with equity markets enduring the steepest daily decline in 2 months. Today's video will provide news, insight, and investment suggestions on the week ahead. We'll analyze 2+1 stocks to watch this week and some others that may be volatile. So, let's begin. Disclaimer. All trading involves risk. Only risk capital you are prepared to lose. Past performance is not an indication of future results. This content is for educational or entertainment purposes only and is not investment advice. Our first stock type is dividend-earning stocks. These are a great way to earn passive income. This week's suggestion is MPLX. MPLX is a diversified, large-cap master limited partnership formed by Marathon Petroleum Corporation in 2012 that owns and operates midstream energy infrastructure and logistics assets, and provides fuels services. MPLX's assets include a network of crude oil and refined product pipelines, an inland marine business, light product terminals, storage caverns, refinery tanks, docks, loading racks, and associated piping, crude and light product marine terminals, and stretch from the Rocky Mountains and the Midwest to the Gulf Coast. The company also owns crude oil and natural gas gathering systems and pipelines as well as natural gas and natural gas liquids processing and fractionation facilities in key U.S. supply basins. MPLX shares have been appreciating in the past year, and the stock is up 61% year-to-date. Michael Hennigan was named president in 2017 and is the chief executive officer since 2019. Some technical analysis data shows that MPLX's return on equity is 21.56%, its asset growth is -2.63%, its average volume is more than 1.98 million, its market cap is $31.07 billion, its beta is 1.86, its PE ratio is 11.5, and its EPS is 2.71. Our rating is 10 and we consider this stock as a strong buy. MPLX reported its 2021 third quarter results early this month. At the top line, revenue came in at $2.55 billion, up 13% from the year-ago quarter, and the fifth consecutive quarter of sequential revenue gains. The net income for the quarter was $802 million, up 21% from the $665 million reported in 2020's third quarter. MPLX reported generating $1.2 billion in net cash from operations, and returning up to $900 million of that to shareholders. Based on experienced analysts' 12-month price targets for MPLX in the last 3 months, the average price target is $35.44, with a high estimate of $37, and a low estimate of $34, with current price at $30.42. This would mean a 16.5% average profit over the next year. Having a dividend yield of 10.76%, the ex-dividend date is on Friday 4th of February 2022 and the dividend pay date is the 14th of February 2022. The annual dividend is $2.82, so buying a MPLX stock now will pay you 69 cents in February. Based on the current dividend yield and the expected price appreciation, the stock has about 25% potential total return profile. It's important also to note that MPLX has increased its dividend for the past 8 consecutive years. The most recent change in MPLX's dividend was an increase of $0.0175 on the 3rd of November 2021. Our second stock type is growth stocks. A growth stock is a share in a business that's shown above average earnings and has the potential to grow faster than the overall economy. This week's suggestion is Uber Technologies, with ticker symbol Uber. Founded in 2009, Uber Technologies Incorporated is a California-based transportation networking company service. It also has a food order and delivery business called Uber Eats and a freight transportation business called Uber Freight. Uber operates in over 63 countries, with more than 110 million users that order rides or foods, at least once a month. Approximately, 76% of its gross revenue comes from ride-sharing, and 22% from food delivery. It has been recovering from the pandemic, but it has yet to be profitable. In a business expansion move, it recently acquired online alcohol marketplace, Drizly, for $1.1 billion in cash and stock. Uber reported revenues of $4.8 billion for the third quarter of 2021, against $2.8 billion in the same quarter last year. Dara Khosrowshahi is the Chief Executive Officer and Director since August 2017. Some technical analysis data shows that Uber's return on equity is -20.6%, its asset growth is 27.65%, its average volume is about 25 million, its market cap is $78.09 billion, its beta is 1.25, its PE ratio is -32. CPS is -1.29. Despite our rating is 6, we consider this stock as a strong buy. Based on experienced analysts, offering 12-month price targets for Uber, in the last 3 months, the average price target is $69.75, with a high estimate of $82, and a low estimate of $50. With current price at $40.52, this would mean a 72% average profit over the next year. Our third stock type is blue chip stocks. These are typically large, well-established, and financially sound companies that have operated for many years and that have dependable earnings, often paying dividends to investors. This week's suggestion is the Walt Disney Company, with ticker symbol DIS. The Walt Disney Company is an American multinational entertainment and media conglomerate, headquartered at the Walt Disney Studios complex in Burbank, California. Disney was originally founded in 1923 by brothers Walt and Roy Disney. The company established itself as a leader in the American animation industry, before diversifying into live-action film production, television, and theme parks. Since the 1980s, Disney has created and acquired corporate divisions in order to market more mature content than is typically associated with its flagship family-oriented brands. The company is known for its film studio division, the Walt Disney Studios, which includes Walt Disney Pictures, Walt Disney Animation Studios, Pixar, Marvel Studios, Lucasfilm, 20th Century Studios, 20th Century Animation, and Searchlight Pictures. Disney's other main business units include divisions in television, broadcasting, streaming media, theme park resorts, consumer products, publishing, and international operations. Through these various segments, Disney owns and operates the ABC broadcast network, cable television networks such as Disney Channel, ESPN, Freeform, FX, and National Geographic, publishing, merchandising, music, and theater divisions, direct-to-consumer streaming services, such as Disney+, Star+, ESP+, Hulu, and Hotstar, and Disney Parks, Experiences, and Products, a group of 14 theme parks, resort hotels, and cruise lines around the world. Cartoon character Mickey Mouse, created in 1928, serves as the company's official mascot. The company has been a component of the Dow Jones Industrial Average since 1991. Bob Chapek is the Chief Executive Officer since February 2020. Some technical analysis data shows that Disney's return on equity is 2.35%, its asset growth is 1.02%, its average volume is about 9.8 million, its market cap is almost $269 billion, its beta is 1.17, its PE ratio is 138.8, 1.09. Our rating is 8, and we consider this stock as a moderate buy. Based on experienced analysts, offering 12-month price targets for Disney, in the last 3 months, the average price target is $205.10, with a high estimate of $263, and a low estimate of $172. With current price at $148.11, this would mean an average profit of almost 38.5% over the next year. Disney is expected to regain its revenue from its theme parks, and they plan to reopen their attractions across the globe. For investors, it's expected that this will be the next catalyst for Disney shares. Some of its theme parks are already open, with regulations in place and restricted numbers. The company's streaming service Disney Plus also continues to gain traction, adding 2 million subscribers during the third quarter. Revenue in the 2021 third quarter climbed 26% year-over-year, to $18.5 billion. All in all, Disney remains one of the biggest entertainment companies in the world, and a conglomerate of mass media, park experiences, and consumer products. The diversity and multinational aspects of the company means it is a worthy stock to consider adding to your investment portfolio. Next week, many companies are going to release their earnings reports, which is one of the most potentially volatile times of the year for equities, and if we are not careful enough, we could put our entire portfolio at risk. Companies may announce earnings or losses and stock prices may go up or down significantly. For this reason, we suggest that you avoid or carefully position for the following stocks during next week, and wait to evaluate the earnings announcement before deciding to invest. Salesforce, Zscaler, and Hewlett-Packard Enterprise will release earnings on Tuesday 30th November. Royal Bank of Canada, Snowflake, Zura, and Viva will release earnings on Wednesday 1st December. Yext will release earnings on Thursday 2nd December. Finally, Dole, Canadian Western Bank, and Bank of Montreal will release earnings on Friday 3rd December. Watch these stocks' prices carefully, and think twice before making any decision. Next week will be popular among dividend stocks. Monday 29th November is the ex-dividend date for 116 stocks, including Estée Lauder and AGNC Investment Corporation. Tuesday 30th November is the ex-dividend date for 113 stocks, including eBay, Coca-Cola, McDonald's, and Kellogg. Wednesday 1st December is the ex-dividend date for 36 stocks, including Home Depot, Goldman Sachs, Nvidia, and Telefonica. Thursday 2nd December is the ex-dividend date for 100 stocks, including Bank of America and PepsiCo. Finally, Friday 3rd December is the ex-dividend date for only 24 stocks, including Nike and United Health Group, among others. Be sure to buy any of the above stocks before the market closing of the ex-dividend date previous day to benefit from the dividend payment. An initial public offering has been arranged on Wednesday 1st December. Nuvectis Pharma Incorporated, with ticker symbol MVCT, will be listed in Nasdaq Global. There are 2.3 million shares offered at a price between $12 and $14. Nuvectis is a biopharmaceutical company, focused on the development of innovative precision medicines, for the treatment of serious conditions of unmet medical need in oncology. Its mission is, to improve the outcomes for people living with cancer. Founded in 2020, Nuvectis is led by a management team comprised of industry veterans with broad and extensive drug development experience, and a proven track record of clinical and regulatory success. By leveraging their core competencies of target selection, drug profiling, and clinical and regulatory execution, they are building their pipeline of product candidates for development in various oncology indications. If you find this video useful, please like it, leave your comment below, share to a friend and subscribe to our channel. See you next time.